Peppa Pig, Little Live Pets, Teletubbies, Minecraft, Scooby-Doo, names of just some of the top-performing brands for AIM-listed character group. Today it's published its full year results, showing a 22.5% rise in underlying pre-tax profit to £12.5 million on a 22.1% lift in revenue, all helping to deliver a 36% year-on-year dividend increase. Let's talk now to one of the joint managing directors, Jon Diver, and in the FD seat, it's Mark Dowding. Gents, welcome. Good to talk to you. Also, Stretch Armstrong, which we'll talk about a little bit more later on, because I know he's one of the new brands that you've brought on board. But first of all, Jon, last year when you were sitting here, you were talking about you're looking forward to an exciting 2016. Clearly, the numbers show a benefit, but what about the progress you've made as a company?
I think progress has been excellent. All the brands have performed well, both on a domestic and international basis. Peppa Pig has had an exceptional year, not just in the UK, but Russia, America. Little Live Pets, we distribute for Moose Toys in the UK. The hero item, Snuggles Dream Puppy, has been nominated as one of the top 10 toys for Christmas. So the brand has grown this year. And all our top 10 brands have performed exceptionally well, delivering a plus 70% share of the total business within the group.
In terms of what you got planned for 2017, what strategic objectives do you have now for next year?
Continuing with those brands, developing those brands from within, creating new product within those brands, and increasing our international business. Our international business has had an exceptional year last year, with 50% growth. We probably had a dominant player with Peppa Pig within that international business, but going forward we've got Teletubbies being introduced and launched in many territories next year, and Stretch Armstrong has had a great year this year with the run up to Christmas. It's actually one of the best selling toys within the Target in USA. It's the 9th best selling toy in total toys in the Toys R Us equivalent in Italy, sold out in Australia and sold out in the UK as well.
And you've taken that from Hasbro, I believe, is that right?
Yes, we acquired the license last year and have developed this scale, the original retro item. But going forward, we're developing it in a mini scale as well, a 7-inch version. Not just Stretch, but his partner or his best friend Fetch, the dog, and the octopus as well. And we're also probably going to go into license as well.
Yeah. Mark, let's bring you in. I know that the numbers I spoke about at the top are just the headline figures. I noticed as well you've got net cash of some £6.9 million on the balance sheet. Now that itself is up 53%. I mentioned the fact that you're paying 30% plus more of a dividend this year than last year, but that's still a lot of cash to hold on the balance sheet.
Yeah, it's a good position to have, and it's improving all the time. You can never have enough cash, but certainly it's a big question for us as to what we do with that cash. We've already communicated that we've got a progressive dividend policy. You'll see that, as you say, the dividend is up 36%. That takes more of that cash as we go forward and as we grow that progressive dividend. And also our share buyback policy is still very much on the table for us.
I think you bought back, what, 1.2 million worth of shares last year, didn't you?
Yes, I think 1.2 million last year, but overall we've spent about £43 million to date on our share buyback programme, and
so you see that continuing into
we see that continuing, specifically if we feel the shares are undervalued and there's an opportunity to buy back shares, we will look at that on an ongoing basis.
What else do you do with cash in a business like this? I mean, clearly taking on the likes of Stretch Armstrong, I don't know what not that incurs a cost in initial setup, but that sounds still nonetheless a lot of cash on the balance sheet for a company with 95 million market cap.
Yeah, it's actually a good position to have, and as we keep replicating this sustainable level of profit that we've been generating in recent years, it's only going to get a better problem. Yeah. So we've got some decisions to make, but when we invest in a new product, that's quite a hefty investment up front. Although we're not capital intensive as a business as such, when you do launch a new product, there is an investment in that product. And as we grow our revenues as well, we need cash to actually finance the additional working capital requirements, the additional stock purchases, additional investment in debtors, things like that. So it's
and your interest payments are really low as well. I think what, £200,000 I saw, was that right? That came off the.
That's right. We have no long-term debt, so we have no gearing at all. We're totally ungeared. and that's just using working capital facilities.
Yeah. John, one of the things I know that you highlighted in your September statement was in fact, you mentioned dollar strength. I mean, we've all been talking a lot about the pound's weakness because of the EU referendum in June. How is this playing out? What's been the dynamic on the profit and loss account as a result of that?
To date, very minor. Going forward, our product costs will increase on a domestic basis because we buy in US dollars.
So you're buying in with a lower sterling, so it's costing
Correct.
more. Yeah.
However, the international business is a dollar business, so it generates dollar profit and therefore mitigates some of the problem that we have on a domestic basis. Domestic basis will be a combination of increased dollars from an international business, product de-speccing, price increases to a minor level, and new product will be cost accordingly. So whilst it's there, it's an issue. We believe we've got it in control. We've previewed our autumn-winter range next year to our customers and have presented our plans going forward, and the retail industry have embraced the strategy that we've put in place.
Yeah. What about next year, because we've seen recently consumer confidence numbers from GfK down a lot more than have been expected. Deep down, how do you feel about next year? Are you cautious? Because there is an element of, well, certainly an unknown. We don't know yet about the Brexit negotiations, when they're going to start, what shape they're going to be. And a company like yours, which is so consumer-facing, if you see a continuation of the drop in consumer confidence, that presumably will have an effect.
I think I can answer that in two ways. First of all, history says that when we go into uncertain times, the toy industry is resilient. We're actually delivering a 5% growth as an industry in the UK this year. On a European-wide basis, that is also delivering growth as well. So the toy industry is very buoyant at this moment in time. Character Group has sales on a domestic basis of circa £100 million. We have a market share of around about 4%. We have 96% to go after. So therefore the question should be is the strength of our product line rather than the state of the economy or the uncertainty. Because in reality, if our product line is strong, our market share can increase and therefore we can deliver growth. I believe next year our product line is very strong. Do you have to go out and try and deliver a really good presentation to get brands in, or are you finding that now the tables have turned a bit? We're the largest independent toy company. Our competitors aren't above us, they're below us. Therefore, we are approached all the time with opportunities. Whilst we're in this position of delivering great brands, and our brands year on year continue to be successful. Peppa Pig's been in our line for 11 years now. It represents 20% of our business. Minecraft been in our line for 3 years. Little Live Pets 3 years. Fireman Sam 8 years. Texter 3-4 years. Scooby-Doo 12-13 years. This fella Stretch Armstrong we launched 20 years ago and we brought it back this year. Our brands are very, very strong. So whilst opportunities come, we are in a fortunate position where we can be selective.
Yeah, and as you're saying, Mark, you've got cash on the balance sheet. From your seat, how do you see things developing next year?
Well, I think we're only going to get stronger and stronger. We've got a very good capital base. I mean, our balance sheet is very strong. We don't feel that's, our valuation reflects that. But
well, let's look at the valuation,
yeah, sure.
And bring up a share price. This goes back, I think, to June 2014. It gives an idea as to what's going on. There's a 10% uplift today on the back of the numbers out today with your full year figures. What do you tell investors when looking at a share price like that, a 95 million market cap? How do you value Stretch Armstrong? How do you value Peppa Pig and all the other products you've got?
Well, really, our valuation is driven by the market demand for our shares. So the better the dividends we pay, the more confidence people have in our share price appreciating over time. That will build up demand, and that will push up the share price, really. So the market is really valuing us as a proposition. And I think at the moment we're valued at something just short of 10 times earnings. If you look at a company like Hasbro or Mattel, very global, very mature businesses with their own IP, they may be valued in the 20s in terms of price earnings multiples. So we have a long way, there's a big gap there that we can go after. And as we keep replicating these excellent results and we carry on, we've got this great core of products that delivers a more certain level of sustainable profitability and cash as we go forward. The market will, I think, value us on a better multiple, and the shares will go up.
Finally, John, you're at the Olympia Toy Fair in January.
We are.
What does that do for Character Group?
that's where we launch our next year's range to all our retail partners. And we'll be presenting both on an international basis and a domestic basis the line for next Christmas.
Yeah, okay, well look, I wish you well, but thanks indeed for joining us.
Thank you.
Jon Diver, one of the joint MDs, and Mark Dowding, the FD. It just leaves us now just to say,
Let's trust this fella.
goodbye to Stretch Armstrong.